we did all of this without anything. So then again, are we competing on the same level? Probably not. I fully bootstrapped the whole thing from get-go. So it was literally not $1 of money that came in from anyone else to get this going. So I suppose that is a little bit of a thing for us. If someone came in with a lot of VC money, maybe they could pump it up pretty quickly. But I think you got to get a lot of things right, and we'll tell you a lot of them, but I'm not sure we're going to tell you every single thing to compete. You know what I mean?
Hey everyone, and welcome back to Vertical Blocks, where today we are joined by Blake Hooper, founder of Equalizer. If you are in the Fantom ecosystem, you probably know that Equalizer is really picking up. There's a lot of awareness around it. People are talking about it. So here we've got Blake to tell us a little more about what exactly it is that Equalizer is bringing to the ecosystem and what it's like to build a business in DeFi. Blake, thanks so much for joining us here today.
Thanks very much for having me. I'm really excited. Obviously, you guys have been great as we sort of built on the network. So really good to finally sit down, sort of run through some of the areas that we've faced and crossed as we've built on the chain. And so far, been a great experience. So yeah, look forward to sharing some ideas and thoughts with people.
Love to hear it. So before we started the conversation here today, you're telling me a little bit about yourself and your background and sort of when you had this awakening moment of, okay, what is actually possible in DeFi? Where does it cross the line, stop being just a silly little self-reflective game and become something greater than that? So let's go back a little bit. What drew you to crypto in particular? And then from there, how do you make the hop from doing whatever you were doing to launching and running Equalizer?
Yes, so I think Bitcoin sort of engulfed me, and it was about trying to understand what the blockchain was. So you're effectively really getting engaged in how that's operating. You then move into like smart contracts, and then you start to go even deeper and really start to understand that you can build on the blockchain, make these little contracts that do certain things. But then I think the switch flipped for me when basically I started to understand how complex you could get into these contracts. Like at first you're thinking of real world cases and how, this could really adapt. And I just spent so much time learning about it. And then I sort of hit this area where I sort of really started to delve into the Fantom DeFi world and understand about liquidity pools and then it all started to make sense from a business perspective, because that's sort of where my background lies is in business, sales, marketing. But then the numbers really sort of gel with me. When you're in business, you're always looking at deals. You're looking at areas where, what makes sense, what mathematically works. And then you start to look into these protocols and realize they need to have some sort of income that sustains. Do you know what I mean? There needs to be something. They need to be generating a revenue for these token holders, or really you don't have much substance to your token other than community and hype. So the more I started to delve into it, and then Andre obviously hit the scene with his solidly, mediums, videos, product, and it all was clicking even more for me. And I'm like, this idea is ingenious. And then I just went so deep into understanding all of the mechanics that then you get further on in the journey and you're going, how can I improve this? How can I take this to the next level? So that sort of was my journey. Was like, it was a bit unexpected, but every time you look into something, you found another area of value and benefit. And finding how easy it was to operate on the Fantom network, really in the way I look at it, it's like, it's no different to operating on Ethereum, but it's just much better experience, right? Like, who wants to pay the ridiculous gas fees? It feels like your transactions are going through quicker. When you're operating proper DeFi that's complex, like what we're doing, you're doing lots and lots of transactions. We're working with people with 6,000, 7,000, 8,000 transactions in their wallet. So Try and do that on Ethereum, you'd soon find it's breaking the bank. So I think that was the journey, and then we got to this place where we're going, far out. Fantom is this great place to build on.
And what was it about coming across Andre's solidly DeFi primitive for the first time that made you kind of go, that's where I'm going to build?
I think I really loved the way it was able to generate revenue and then send it back to the token holders. The flywheel aspect made a lot of sense to me. I invested a fair amount of money in it, and I really got sort of into it. And when you do invest, you start to learn more and more and more. And I started to see areas that I thought I could improve upon. Like I thought that there was a little bit of imbalance in what the rewards were for the amount of tokens, and I'm a bit mathematical, so I'm going, whoa, okay, I'm seeing imbalances here. Like we would need to do this much volume to do, whereas I went, okay, I'm going to flip the switch. I'm going to change this so that we don't have to do as much volume. I'm going to charge 20 times the fee, which is the same that supports liquidity on all of these other DEXs. And I sort of started to think that, this is the greatest model, but there's actually a few areas that need improvement to really get the flywheel moving.
Well said. And I mean, I think before we get into some of these other differentiators that set Equalizer apart, just for those listening that may be coming across this for the first time and maybe like opening up another tab, trying to figure out what Equalizer is, give us the 101. What, at a high level, what is Equalizer exactly? How does it differentiate from the traditional AMMs or automated market makers that people might know already?
Well, I think Equalizer is a self-sustaining model to incentivize people to purchase the token or have utility on the token, as opposed. So it's a Uni V2 engine, which, as we know, everyone forked, and we've got your pancake swaps. You've got on Fantom, you've got your spookies. So you've got that original sort of Uni V2 model that was used everywhere. Andre went a step further and put the stable swaps on that automated market maker. So you've got two different algorithms running. So now you're sort of like a Uni V2 and a curve. So you're effectively now competing in two spaces. And then you've got all of the fees that come to these people come through these transactions going back to the locked holders. So in our system, you're locking for 26 weeks into a wrapped ERC 721 version or token, which is wrapping up your equal for that period. And then you have the ability to govern and earn 100% of the fees for any pool that you're actually voting on. So the model, I'd say, is sort of like an adaptation of your Uni V2 and Curve, putting them together, and then using a wrapped ERC 721 to wrap those tokens up so that they're then sort of semi-liquid. As you know, with like Curve, they lock the token, but it's ERC 20, and then they've come with a convex layer on top to then be able to liquefy it again. Whereas the beauty that we've found with the ERC 721, a lot of this is through learning, is that it is semi-liquid and it gives that secondary market, but it's just enough, we're finding at the moment, to really get people going through PaintSwap and purchasing their token that way, but still having people that just want the easy way in and buying equal. So I think the mixture we've found working really, really well, and you'll probably see like we're double the volume of anyone on PaintSwap this week. So definitely the model of wrapping that token has worked well. So I think the way I look at it is we're advanced DeFi. We're at the bleeding edge of any other protocol. Like, there's obviously you've got your like your GMXs and stuff like that, which are very complex. But we're getting to that area where it's complex DeFi. There's a few aspects to understand, but the rewards are there because we're incentivizing everyone with every fee that comes in is incentivizing and providing utility to your token.
Yeah, you certainly have a lot to celebrate from your accomplishments so far. Today's the day we're recording this is February 7th, and you recently surpassed every single other AMM on Fantom for FTM USDC liquidity, correct?
That's right. Yeah. So the incentives obviously work. Like the system works. It's been able to, and Austin says it well from BlockBytes that it's like a liquidity vacuum. Like it's just, and to be honest, the APR that we're giving at the moment on that is still like it's still huge. It's got so much more room to grow. So our job now is to get that out to the market and let people know that they've got to put or to come and stake their liquidity with us, because like the returns are 4 times, 5 times what's seen on other DEXs on the network. So again, the model's working.
And so essentially there's 3 market participants, right, in this flywheel. There's the liquidity providers, there's traders or people who are swapping an asset for another, and then there are the protocols that want to incentivize liquidity for their native token, correct?
Yeah, that's one aspect we didn't really go into is the bribes or the people that are effectively incentivizing inefficient liquidity, or in some ways you would consider it inefficient, because what works or what's so different in this model is that the governance is with the equal holders. So if your token is doing no volume, then it's not generating fees. How are you going to get people to vote for you? That's basically, I suppose, that aspect where people are now saying, well, we need to bribe our liquidity. It makes sense for us because we can incentivize more liquidity, go deeper with a token that's not ours, get people involved, and then they have the opportunity to lock and then start to incentivize. But also a lot of people have their protocol own liquidity, so they're then placing that on there and they're doing a bit themselves to start to create their own little flywheel or at least get some sort of level of return on their liquidity.
Awesome. Yeah, a few different approaches to it seems. Now, so I want to go to the go-to-market strategy part of it, because you mentioned, okay, we've got the tech down. Obviously, you're continuing to improve it and optimize where you can. But you're saying, okay, now we got to bring this to market. So I want to start with one thing that seems to be a spicy take, which is I'm not sure how effective airdrops are. This is my personal opinion, based on a few of the different examples I've seen. Sometimes I've seen it done well. Majority of the times I've seen it done poorly in a way that backfires for the protocol. Now, that being said, I know you did an initial airdrop, so I'd be curious to hear what your experience doing that was, and what, if anything, you would maybe change in the future for other builders that are considering, okay, how do we bootstrap users?
Yeah, definitely. I think the airdrop for us was probably our most successful event. And the reason, to give us the traction we gained. Like a lot of people said, how can you compete on Fantom with 77 DEXs? Like, what are you guys thinking? There's already a solidly. There's a solidly going, that's revamping as well on Fantom. What are you guys doing? But that airdrop for us was like, I see it like a free gym membership, right? You're effectively saying, come in, here's your free gym membership, try it for a week, and if you like it, stick around. What we also gained from that airdrop, and the reason we did it, was a community that, or we tapped a community that had an understanding on a complex product. So Solidly itself is very complex, and we knew early that we needed to have a community of people that were ready to support people to learn the process. So what we did there is we basically, for a better word, bribed them to come on. Here's your stake within the protocol, and we made it nice. So we gave it in levels depending on your understanding of the system. So if you were just an interactor with Solidly, you got a level 1. If you interacted with Solidly and one of the convex layers, then you got boosted to a level 2. If you also interacted with like Velodrome, which was another spin-off of Solidly and doing quite well at the time, then you were a level 3. And at that point, you got 300 VE equal. And I'm doing a rough calc on price at the moment in my head, and that's $3,600. So you know what I mean? Like, we gave these guys a stack, and we made it limited so that we could give people a bigger stack. So if you were really dedicated and interested, then you came in and you joined our airdrop. You got those tokens and you benefited from it. Now, we have the residual issue at the moment, people coming in and saying we missed the airdrop. It was like, we should get the airdrop. And we're saying, well, firstly, the airdrop had a purpose. It was to draw those people in. And whilst it was not completely subscribed to, it was there to incentivize people to join early, take the risk, connect your MetaMask to a contract and a system that you're not too familiar with. Like you got to remember, like you're asking people to do actions that are a little bit risky, so you've got to give them something to make it worthwhile. And I would almost go as far as to say this is potentially up there with the top airdrops of all time for value, right? Like there's lots of good airdrops that went out that gave value to their users, but a $3,600 total airdrop at the moment for those top players, with the ability to earn an income at the moment of 120% APR averaging sort of every week we're seeing, like I'm getting constant DMs saying, wow, you've really done something amazing for us. So that got that community aspect going. So what I would say, like with your thing on airdrops, is the one battle we had, and I think you get with an airdrop, is that people come and they want something free then. And that is a little bit of a double-edged sword, because you release a token, you need people to be interested in purchase. That's how the economy works. That's how the flywheel works on it. But then, so effectively they come in and then they want this free airdrop, and now they're not willing to buy your token. So you get a little pause period, I would say, where you got to go, whoa, okay, we got to deal with this. We got to manage this little 2-week lull, 3-week lull where everyone just wants something for free, and then that flips off and you start to get your momentum, I find.
Well said. Yeah, I think that's an interesting answer that does slightly change my perspective on what I've seen. I usually see more of the negative or unintended consequences of it than the positive ones, but you've put it very succinctly. What I wanted to ask as well was kind of, thinking about what you just described, gaining users, gaining them originally, using airdrop as an incentive to get people to learn how to interact with what you've described as a relatively complex tool. Do you feel that the product that you're building and you're delivering is targeted towards a specific audience or a niche of, say, highly specialized users or professionals? Or do you feel that it's just complex now and over time it will be simplified for a wider audience to participate in?
Yeah, that's a difficult one. I would suggest that it's an aspect of both. Mm-hmm. Like, I think what you get with this, like the way I look at it, you've got two sort of customers, I suppose, or two people that are using the protocol. So you've got your liquidity providers, right? So you've got they break into two segments too. You've got your professional farmers, right? They're coming in and their job is just, they're farmers. They provide liquidity and they've got their strategy worked out. And then you get the fund farmers. So they're coming along. They like tokens. They like to pair them together, and they see the benefit of hedging and having two tokens paired together with these nice APRs. And then you go to that V equal holder, which gets a single asset. He gets all of the fees of the protocol, and he has to vote once a week. So you can simplify it back to, wow, these guys are looking at impermanent loss. There's all these aspects that are looked at when you're farming. But you come over as a V equal holder, you're buying an asset that is locked. You come in once a week, you vote it, you look for some good APR, your fees come through for you. You click them out, and you buy some more of something else, or you just build them up because you're bullish on Fantom. So you just, like, some of the benefits for these V equal holders. Remember, some of these guys were buying this for 30 cents. They're now got the token's valued at $12, and the volume in the TVL has grown hugely, right? But their 30 cent per investment this week is returning close to 30 cents per vote. So they're almost like getting their original investment back this week alone, based on what they paid for that token only 2 months ago. So I think, like, you're able to get on a single asset and then just recoup the fees. And obviously, we're looking to continue to grow volume in TVL so that you can effectively continue to grow and grow and grow. And like we're competing with centralized exchanges, really, right? Like, I think that people, as they get a larger understanding, are looking to sort of drift back across and control their own assets. So we just want to keep growing that volume and liquidity so we can continue to support these guys with an asset that is strong and has a strong return each week, that you don't have to worry too much about, and you don't have to worry too much about like, did this asset go this way or that way? And one last point to make is like people were earning Fantom at 20 cents, right? Like I know because it was happening for me, right? So I was earning the fees on Fantom at 20 cents and now we're at 56 cents today or something. So you can look at the APR and then you can times it by 3. Like it can be pretty insane when you start to actually go through like the mechanics and what's happening in the background. And obviously bullish price helps. And we're not saying that everything's always going to be bullish, but hopefully the market's starting to find a bit of a bottom, starting to see the economy return a little. So hopefully people are getting an asset now that, you know, in a bull run could be worth 10 times.
Yeah, I mean, speaking of how the market influences sentiment around a protocol and its adoption, you know, one of the reasons I wanted to bring you on the show and I want to talk to you, and the reason why I have a lot of respect for the Equalizer team is because you all decided to launch at a time that was a lot less rosy than it feels today, right? When things were looking a little less positive, a little less optimistic. Now you're starting to feel the market has turned around a bit. Knock on wood, who knows? Nowadays anything's possible. But you know, you came and you did that, and you built a solid brand, a solid community. When things were kind of working in the opposite direction. Now that they are going in the direction you want, just like in you know, on every other chain and in every other space or vertical, even outside of Web3, other builders and entrepreneurs are going to see, okay, there's something juicy here. Equalizer's onto something. We want to compete as a fork. We want to vamp the liquidity, whatever it is. And so this is a question I always ask all the founders and entrepreneurs that come on the show is, what do you see as your moat? You know, one of the things that I think about immediately is this flywheel you're describing almost starts to function as an economic moat of sorts on its own, because it's hard to reverse and it's hard for a new entrant to compete against it. But I'd be curious to hear from your perspective, where everything's forkable and things can be essentially copy pasted and deployed. How are you going to, you know, maintain that, like, keep that liquidity and keep that a community?
So you want to give away all our ideas to these people that want to fork? look, we get people on the daily reaching out. Oh, we want to fork. Can you help us? And look, we definitely guide people as much as we can. You know, like I think the space is big enough for multiple players. But I think at the moment, like there's a big reason why we and our UI needs a little bit of work. We've just brought on a new front end developer, and he's like deep in it, getting it fixed up. But like we haven't released our front end as open source for a reason, because it just makes that barrier to entry a little bit harder. I think if people I don't want to have a go, then obviously, you know, they're gonna have a lot to sort of the momentum. Like it takes a long time. Like I'm talking 4-hour nights sleeping. Like you're sleeping, you're working 20 hours, you're waking up to, oh my God, what's going on? You've got a Discord that's absolutely flying that you at first you're trying to backtrack and read every comment. Then it gets too much, you can't even do that. Plus you're trying to onboard partners, plus you're trying to educate, plus you're trying to, you know, keep this community vibe and everyone sort of in the same sync and educate them and get them on the right path. And then you've got marketing. Like, so there is so many barriers to get it right. And I think people will get it right? And they're gonna be bouncing around next to us. But our moat, I think, is that we understand the protocol very, very well. We took it. We were the first one to adapt to have the different fee structure, and people have followed. So I think we did a lot of things right. We got that early mover advantage. You know, like there's a lot, like initially there's so much work in reaching out to people that just won't even talk to you because they're saying, hey, why should we? To the point when then, hey, now they come to talk to you. Can I get a whitelist? Can I get this? Can we talk about this? Can we talk about getting bribing on your system? Can you show me this? So I think, you know, the momentum for these people, you need to be ready for it, right? You need to be ready to work like, you know, 6-8 months of just hard graft to even get that momentum initially, unless you're coming in with big amounts of VC money. And then, you know, we did all of this without anything. So then again, you know, are we competing on the same level? Probably not. You know, I fully bootstrapped the whole thing from get-go. So it was literally not $1 of money that came in from anyone else to get this going. So I suppose that is a little bit of a thing for us. You know, if someone came in with a lot of VC money, maybe they could, you know, pump it up pretty quickly. But I think you got to get a lot of things right, and we'll tell you a lot of them, but I'm not sure we're going to tell you every single thing to compete. You know what I mean?
So I have two questions from what you just said. The first one is, and I'll do them one at a time because otherwise I just start rattling them off. The first one is, I think a lot of builders are stuck in this catch-22 of, I have an idea, I'm actually going to do it, I'm close to launch, but I'm failing to establish partnerships with their protocols. Nobody will take me seriously. Like, I need to have something to get something else, but to get something else, I have to have something first. How do you get out of that inertia? How do you break out of that funk?
Yeah, you need a good BD if you're not one yourself, right? So relationships are key. They always are going to be, and you're going to have to build and leverage those relationships. Like, I'll give you an example. We struggled to get 1-inch integration. The great guys, but they're busy, right? Like, you try and get a look in when they've got so many things on the go, and you're just a little player trying to get liquidity rolling. But then, I probably won't give the names, but we've got an intro from a pretty big player on ETH, and bang, next thing you know, we're chatting away, we're integrating on 1-inch, within a couple of days. So I think you find that, like, you've got to have a strong BD focus. You've got to really, because no one's ever going to read your docs. Then they're not going to believe what you're saying. Like, like my vision from 3 months, 3 to 6 months ago, people only just sort of go, oh, okay, he was sort of onto something here. Do you know what I mean? Like, so people are busy. They're looking at it. They go from the outside. Yeah, everyone's saying they're the best. Everyone's saying that they're going to have more liquidity than this guy. Everyone's saying that they can do X, Y, and Z. So you really need to get your material right. You need to get those hooks right. You need to get the angles to take to these people to make sure that you're building these connections and building that foundation of relationships where people are willing to support you and help you grow. Because there's so many great people in the community. We found that like there's so many great protocols. And I'll give a shout out straight away to like Firebird, like integrated us straight away. Helped us with marketing. They were instrumental. Like, if we might have a very different story if we had a setup without any aggregation. So I think like you find that there's some great people that sort of help you get going.
Yeah, I mean, I think that's important advice for builders who are thinking about launch and take into consideration. I mean, Equalizer obviously has a very strong product, but equally so, has a strong business development team, no pun intended. And so that's how you've been able to formulate partnerships that have accelerated your adoption so quickly from the beginning, where, oftentimes you see extremely talented teams of developers, and the missing piece of the puzzle really is that business development and marketing angle, being able to form the connections that will help their protocol get eyeballs and ultimately, get liquidity, get adoption, get users. So yeah. The other question I was going to ask is, it's very similar to Fantom, where we've taken very little VC money over the long term of our development. What made you decide that you wanted to go with the bootstrapping path, rather than raising a bunch of funds and using that as liquidity to get off the ground?
Yeah, I don't know. I wanted to give back to the community. I think that was the biggest thing. Like, we gave that airdrop to people. Like, I saw it as like, I'm gonna build this ground up, and I think it then gives people like a fair launch situation feeling. So that obviously goes further and gives you that more marketing, like that more everything's a flywheel, right? Like, once you get these people on board from that. We could have sat down and my developer at the time was saying, let's get funding, because we were working hard to try and make it work, and like I'm paying front end developers, back end developers to get it all going. We had nothing. But I think you lose control as well. Like, you're at the mercy of these people that then have so much power over you. Like, we're now so lean and able to sort of move that we don't have any sort of baggage, and we don't have people thinking, oh, these VCs all got in, it was a fair launch. So you don't have like these VCs that 200x. Like, if you're buying the token down at 5 cents and now it's at $12, like, how much do these guys have? Like, So yeah, look, but we may never have got down to 5 cents if we had VCs. You know, they might have always might have started at this price. Who knows? So yeah, I think you know, we took the approach that we want to build something special. We want to get the math right so that we don't need to be propped up too much.
So let's talk a little bit about the math for those who are interested in the specifics a little more. We don't have to go too far into it, but just to get a general idea. You know, from my understanding, one of the big changes that you made that gives you competitive advantages, changes to tokenomics and the fee structures. So maybe walk us through that. You know, what was the problem you saw and how do you decide to approach it?
Yeah, so I suppose let's start on fees. Like, obviously, the first thing I do is I get the volume and I times it out by what you're going to make. So if we're doing $1 million of volume on a volatile pair, we're making $2,000 in fees, right? So that's what needs to support that liquidity and needs to be then generated back. Then you've got these people that are obviously going to buy your token, which is on an inflating scale. So you need to have it worth their while. And my view when you build these things, right, is you're going to have a market expectation when you first start of a higher annual return on that token. And I think as crypto develops as a market, like it's funny, I was actually talking to my wife as I'm like bouncing these tokenomics ideas and running all these scenarios. And I've said, babe, the APR will change. And she said, but in 4 years, 5 years, like the market expectation is going to be different as well. Like if you're investing in traditional stocks, 5% dividend, yeah, like we're turning out 100% at the moment. So from my perspective, it all had to work, right? It had to be like, how can I support these people? I didn't want people sitting out there that had, you know, like an investment and that they were just getting nothing from their return. So that's why we 20 times the fees to support it. Then we reduced the amount of people that were there that were actually claiming on these fees. And I suppose our next part, and these ideas are going through our head all the time, or mine in particular, is how do we put a deflationary pressure on it, right? Because you are emitting tokens. You need to be considering what is the situation that can help you sort of combat that a little bit. And then the bit that I probably didn't touch on, I should have, is it's a huge difference in the way that everyone else launches these protocols, or how they did launch. And people that have been talking to us starting to pick up on it. But the yield farming curve was used, right, with this situation. And I looked at it and went, I'm not sure the yield farming curve is correct, right? Because that was always put there for like one of these emitting tokens that has no utility, that was there to support liquidity and do all of this stuff. So the adaptation and bringing over of the curve that was used for a different product didn't make sense to me. So what we did is the part of Andre's model, which works really well, is that tail emissions. So it had a big drop, and then it ran on an emission schedule as a tail for and pretty much like Curve at the moment, right? They're running on this tail emission. So what we did was we went straight to that from the get-go. We were like, okay, we're going to tail it. We're not going to have this big drop down, which means that, you know, the amount that you're sending out each week's dropping quickly. There's lots of tokens coming into the market, like you're flooding the market, which does help for marketing, but it doesn't necessarily help for price, because it can go like this and then like this. So I think that was where our sort of big adaptation sort of changed the tokenomics to try and make it a little bit more appealing for people to be a part of it. I think they're the main areas that we sort of touched on.
And to just take a sort of step back, because I'm sure people will hear this and say, what exactly do you mean by this, you know, the former model of this token that has no utility other than to support liquidity? Like, what does that mean exactly? Like, let's break that down into the basics.
So you're meaning more like emitting a token to support liquidity that like even to an effect, don't want to mention names, but how a lot of Uni V2 DEXs work, where they just send out a token and the utility is that, hey, you're buying into it. Yeah, look, I think that like the more I learn about crypto, the more time I spent in the space, the more I started to go, and I bought some doozies of tokens, right? They've done this, they've done that. And I think that's how you're learning, right? And you're going, well, how can you have a token that's not supported by utility? And people been saying it for 5 years and it didn't even set into me. Utility, utility, utility. But I think the main thing that you need in utility is a return. Like if you're investing in something for this whiz-bang product, well, what's my revenue share, right? What am I going to get in return for being a part of your protocol? What's going to make me get my wallet out, buy your little internet token, unless you're supporting me with some sort of return on that, some sort of revenue? Like, I suppose the utility to something like Fantom extends from, like, I look at layer ones a little different, mind you, because I think layer ones are like your base layer applications where you build your applications. They're like the internet or something like that, right? So you're effectively got an inherent value that you provide. But if you're just building on that network at that, then you better quickly have some sort of return or utility that you're giving back to that person. So I'll go through some of the levels of utility that we have. Like, firstly, the obvious one that you're going to get the fees. You at the moment, Tarot lending, right? So you can go on Tarot and lend, and at the moment it's probably about 100% APR just to have your single liquid token staked. We've got huge APRs supporting that liquidity as well. So we've got liquidity, people providing liquidity and earning on that. Then you've got the trading utility. Like, people, there's traders out there. Like, people say, oh, I don't want people to buy and sell my token. Well, A, they produce fees, but B, they're effectively, it's a utility of your token. You don't want it to be your only utility, but every time you have a utility for your token, then I think you effectively grow the reason for people to hold it, but you also enhance those income streams for those people.
Well said. And I think for that second part, for those on the other side of the world, it's Tarot, right? Tarot Finance, Tarot.
Yeah, Tarot.
Yeah. I was like, what is that one? And I was like, yes, it's the Australian pronunciation of it.
You told me lots of builders are watching this.
yeah, lots of builders. Yes, lots of builders.
So yeah.
No, I was gonna say, yeah, phenomenal answer. Was there something else you're gonna add to that?
No. Just Tarot is another great product to sort of investigate. Well, if you're going into DeFi, that was one that really got me. Like, as soon as I started to learn what they were doing there and how you're leveraging LPs, and there's a lot of math that goes behind it, and even myself, like, I find myself going, oh yeah, am I in the best position this way or that way? Like, but it's a great product, and it helps us. Like, we got the most leveraged liquidity of anyone sitting there on Tarot. So, like, they've been instrumental in helping us build that liquidity level quick.
Yeah, big brains there for sure. And I do love seeing how those partnerships form, and the composability that building on one single state layer one offers, right? So that drives me to my next question, which is we're just talking about L1s, and I know you're very bullish on building on Fantom. You gave the analogy on Twitter maybe yesterday, I think, that ETH was Yahoo, whereas FTM was Google. Tell me more about that.
Yeah, look, I think you've just got to use the two networks, and then you'll simply go, wow, okay. Like, I struggle to do DeFi on any other chain, and once you get your assets on the Fantom, you find it really hard not to put every asset on there, right? Because you can easily move them around. Like, if you put your Ethereum on here, you can easily then trade it, put it out for a loan. There's so many things that you can do with on the network that you can do at the fraction of a cost whenever you do a transaction. Like, you look at like a serious Fantom DeFi guy, and he's doing 6, 7, 8, 9,000 transactions in his wallet. Like, I see it all the time. Try doing that on Ethereum. Like, you can't. Ethereum's great if you want to use a Uniswap and swap a token every now and then and pay $7 or $8, or sometimes we're paying $50. But it's not too bad. But then you come to Fantom, which has just got that experience right with the gas. Then you see your transactions going through quicker, and then you start to go, wow, okay, this is a better experience for me. Like, I'm hitting transact and ETH's taking longer. Like it's easier to operate on Fantom now, and I'm able to do like all these micro transactions. Like the amount of transactions you do as you get a bit more into that DeFi landscape where it becomes your business, what you're actually doing, you're effectively then going and doing so many transactions that it's great to have a smooth network. It's great to know that like when it spikes with a bit of traffic, it comes down very quickly. Like there's been some great upgrades. And then you've got the FVM being developed in the background, which is going to just change the game completely. And then you then almost look at Ethereum and you go, well, Ethereum has just gone to proof of stake or something new. Like, are they copying what Fantom was doing? Like, so you're sort of seeing them like sort of trend towards that. So then you've got your FVM. Now you're like a real serious contender because, you know, obviously you're moving out of that EVM space, but you're still compatible. And the way I look at it is like, why would you operate on it? Like people have seen ETH and then gone to a layer 2 to operate, right? They're going to OP, ARB, right? And they're using these layer 2s. Whereas I see Fantom as a hybrid. I'm like, you've got Fantom, a layer 1 that you can build on, know that it's like your home. It's fantastic. It's not a layer 2 spin-off, you know, it's your home, but it's a side chain as well. Like nothing you can do on OP or ARB, you can't do on Fantom. Like every asset, the thing that we're lacking a little bit on Fantom at the moment, which will continue to grow, is just bringing, and that's our job, but bringing more assets to Fantom, right? Because a lot of the volume that goes on is trading. Let's be serious. Like so really, why would you swap? What separates like an OP or us is that maybe they have a more efficient ETH swap at the moment, but you're paying a higher gas. So I think like you get the best of both worlds building on Fantom. You're on the layer 1. It's a side chain that can do everything that can be done on these layer 2s. So you really like, you know, at the end of the day, competing in that space, about to launch the FVM, which is going to be ultra bullish for Fantom. Like we're doing that this year. And then I think, you know, with that type of transaction output, the smoothness and the effect, and you've got, you know, the big brain of Andre sitting behind it, and everyone else on the team. Yeah, I definitely think that, you know, that's that situation where the Facebook comes and the MySpace drops. You know what I mean? Like that's what you get.
Good endorsement. Yeah, if you can't tell listeners, I'm very much biased towards Fantom and work there. But the only thing I disagree with is the sidechain terminology because it sounds more like it'll be a Robin instead of a Batman. But I totally hear what you're saying, you know. Maybe some other things will be called sidechains in the future. But no, in all seriousness, Blake, this has been a fantastic conversation. Please go ahead.
No, I was gonna say, what would you call it? I'm trying to work out the better terminology to describe it because you know the point I'm making, but.
Yeah, of course. For now, I'll just go with the layer 1 to rule them all, but I'll rethink it and I'll come up with a better one later. I mean, in terms of as we wrap up the conversation here, like I'm sure there's some things that you're working on under the hood that you can't disclose quite yet. But what are some of the things you're looking forward to in the near future in terms of what you're building over at Equalizer and you know, some of the updates or upgrades or changes that people might want to keep an eye out for?
Yeah, okay. So we're working heavily to make some adaptations to the contracts and improve some stuff there. That'll give us more flexibility and ability. You know, one, I'll put it out there. You know, we will integrate fees, independent pool fees, so that we can adjust fees for certain pools when it makes sense. We're doing huge upgrades on the UI and more just to, you know, sort of improve that user experience. There's, you know, you've got to. One thing we have is a very complex overlay or a system sitting on a very complex like base layer, which is like more like if you get into the contracts, you understand what I mean, and like you're interacting with so many calls, so much data. Like there are some complex parts, so we want to improve that experience. But once the area we see ourselves improving as well is like we want to get more people interacting with us as that first point of call. So when you come to Fantom, we want to be that on-ramp, right? We're huge on education. That's what we've built ourselves around. We're going to go like even further into that education process, especially through YouTube and stuff like that. So we want to be educating people, showing them us as the on-ramp, making it easy to do those first interactions like swaps, get themselves going, and then take them down the journey. So you're almost like onboarding people across the Fantom to show them DeFi, like an educational series. Because I think that's where the beauty of growth lies at the moment, that you've got these people that are like our perfect ideal person to use our system, I would say, is maybe a bit of a business background, likes numbers, bit of sort of like a finance guy maybe, or someone willing to expand and have a look at like other ways to sort of do things. So I think we need to then tap those people, and obviously blockchain enthusiasts. So people that were probably at the step before we went, oh, this is what you can do on the blockchain. So, we understand Bitcoin. And like, I just see it through friends that are like, oh, come around and can you give me a session, Blake? Show me how your system works. Oh, wow. So like, and they don't get it straight away, right? Like it's a big learning path. So we want to try and find people that are a little bit further down the learning path, and then bring them to the next stage of it. So yeah, I think that's what we're doing.
No, like I said earlier, you're doing a phenomenal job with the educational series on the Equalizer YouTube channel. So we'll drop that in the links below. Highly encourage anybody who's interested to go check it out. Where else can people stay up to date with Equalizer and your own personal thoughts, Blake?
Yeah, definitely. Definitely Twitter. We've found that to be, Twitter is a beast that I hadn't been too familiar with using in the past. But when it comes to crypto, definitely jump on our Twitter, because that's where we try and get most of our announcements out. If you want to get deeper into learning and that, obviously we're big in the Discord. That's where our community base is. There's heaps of people in there that all got the airdrop or came in and really learned the system. And I'm just amazed at like the community and the help that people give. Like the more and more we grow, the more and more people come in and ask a question. They're received well. So definitely, if you want to learn more, jump in our Discord, and we try and segment it into all of our official links. So you can go to Mediums, you can go to YouTube and learn. We've got a lot of data that sort of shows us like June dashboards and stuff like that. But I think if you want to get involved, I would say the best thing is to learn. Like, don't just come in and I'm the first guy to say, don't just buy our token. Don't just come in and go, I just want this moon rocket, because whilst the price looks like that, it's not the core function. The core function is understand what you're getting a share of, why the concepts make sense, and then make your decision whether it's right for you. Because I think there's a lot to learn if you want to be involved and understand Equalizer to the right to the level where you're making a conscious decision that you understand what you're actually doing with your money.
So well said. And I think a lot of teams in the space, across the entire space, could take a page out of your book in terms of how do you educate users, how do you get them to start thinking critically for themselves about the decisions they make, rather than just making these kinds of la la land promises, we're all going to the moon, rah rah, which doesn't end in a very sticky or happy community of engaged power users. So Blake, hats off to you again. Thanks for coming on the show. It's been a pleasure having you on Vertical Blocks. And I'm hoping we can do another one in 6 months from now and see all the progress we made in the meantime.
Yeah, look forward to it. And again, thanks to the whole foundation. Like I can't say it enough. Like people don't understand. Like if you engage with these guys, like, and anyone building on Fantom, come and talk to them, because they're just like open arms. They've really, I'm finding, got their shit together, if I'm allowed to say that. But like, you got to edit me out there. but
no, we're gonna leave it in.
Yeah, but like from the BD space, like working through all these things, responsive at all sorts of times and supportive. Like, there's like a fair system, I would suggest. Like what I found is like, this is what this is how we support new protocols. This is what we're willing to look at with you. And that's the fair, same process for everyone. So we're not getting special attention. You can go and talk to the foundation if you've got a good idea, get their ideas and work with them, because like they're doing some pretty cool stuff.
Yes, if you're listening and you're ready to build, send us a note, info@fantom.foundation. So that being said, Blake, let's wrap this up, and until the next one.
So yeah.